Okay, friends, I want to talk to you about the forecast for 2017 and why I believe that it's going to be a much better year than 2016 was. So there's 5 reasons for that, but before I get into that, I want to talk to you real quickly about human behavior, right? And when people make a decision, when we make a decision to do something or not to do something, but let's, in this case, we're talking about I made a decision not to buy. Why am I not buying? You all know people who have a desire to buy, but have said, I'm going to postpone it, I'm going to wait, see how things go, now's not a good time for me, I'm waiting. People make those decisions, and that's why we have the year that we had last year where sales were down 10% in terms of units in MLS in our area, 24% over 500,000. So, in order for people to make a different decision, they need new information, right? We do that all the time. No, I'm not going to go do that. I get new information. Oh, seems like maybe I should change my mind, right? And so what I want to share with you are 5 reasons why the people that have decided not to buy, although they're qualified, they're motivated, they have desire, they have need, they just haven't taken advantage of it. There's 5 reasons why they're going to make their move in 2017. And it's important that you understand these reasons I'm suggesting, because you want to share these with people who are counting on you to tell me what is going on in the marketplace. It's always better to get in to a market when it's starting to turn rather than middle of the spring and summer when things are frothy and really moving quickly, right? So I'm going to tell you what the 5 reasons are very quickly and then I'll kind of go into a little bit of detail. You can follow along. So the 5 reasons are consumer confidence is at an all-time high. You've seen this in the news. Elections are over. It's at an all-time high. No falling oil prices. Oil prices are not falling anymore. That has a big impact on everything. Mortgage rates, we heard from Michael, are on the rise. How many of you had a potential buyer or know of an agent in the office who had a potential buyer who looked during the frenzied 2012, 2013, maybe even 2014, maybe they submitted a few offers, didn't get the property, prices were going up, and they said, we're just going to lease. We're going to lease and see what happens. This was particularly true of the ExxonMobil migration, where a lot of people said, I'm not going to get involved in that. I think prices are too frothy. I'm going to wait and see. They all went into leases. How many of you knew someone like that? Right? Show of hands. Plenty. Right? So those leases are expiring now, right? So these people who look like renters are actually home buyers. And then the next reason is pent-up demand, right? We see at the end of any slowdown, when things get better, the pent-up demand pushes more people into the marketplace. So let's look at these individually. In your sheets here, I have just a clip of a couple of articles on that kind of support what I'm talking about here. So consumer confidence is on the high rise. This is an article, the reports are coming out. I know you see them in the news. I know you see them on the internet, where now that the elections are over and the stock market's setting new records, and corporations who originally said, oh, it was going to be the end of the world, and now are saying this is the greatest thing that ever happened. Corporate taxes are going to be reduced. Personal income tax is going to be reduced. People feel fairly positive about the future. And when people feel better about their financial future and financial certainty, then they move forward with the decisions that they've been delaying. So we can count on people who are concerned about the economy and what was going on, saying, hey, things are safe now. I think it's okay to move. The next one is not falling oil prices. Right? We've talked about this before. Last year, in January, oil prices were at $27 a barrel, and nobody knew how low they were going to go. Right? All of the articles we're talking about could go into the teens, 12, 14, 18. This is going to last for years. Right? The glut's going to go on for 10 years. Here we are almost a year later, and we saw in the news negotiated, I guess, transactions with OPEC and so on. Oil went up into the 50s, but the general consensus is that not that oil prices are going to go through the roof and go back high, but they're stable, right? They're stable. And when these big oil companies have made the cuts and the adjustments that they needed to make during the downturn, those are all done. And most of them report that business will be relatively flat in 2017, right? Not really spiking up and going forward, and that's perfectly fine. If it's flat, what that means is it's not sloping downward, therefore it's safe. Therefore, I can move forward with what I'm going to do. Also keep in mind that you have this psychological impact when times are tough and people in your company are being laid off and you're in a leadership position. You can't go out and buy that bigger house. Right? You can't really go out and buy anything that seems like a splurge when you're letting people go and when people aren't getting raises. But as soon as the market turns and it gets safe and it's politically correct to go ahead and make that move, a few of them will begin to move, and then a few of those will be observant and say, okay, they're making the move, I'm going to go make the move, and then you have mass participation, right, on a grand scale. So oil prices are stable, not falling anymore. That's a great thing. Mortgage rates are going up. We know that. We've already, Michael was telling us almost 3/4 of a point in a very, very short 30-day period. Right? He was talking about how much more is that for same mortgage, same house price. But if I buy a house, it doesn't affect the price. Same mortgage. The only thing that's different is my payment just went up $100, $150, $200, depending on the price. That's today, right? They're talking about it maybe going up another percentage point over the course of the year, up into the 5s, which is still super fabulous, but it's not as good as 3.5. It's not as good as 4. So smart people, right? Think of the people in the over $500,000 range. Let's see, economy doing well, consumer confidence doing well, stability in the oil market. Prices are really probably at the lowest that they've been in 2 or 3 years. I didn't get caught up in the froth. And if I wait, my mortgage payment's going to go up. What should I do? Just keep waiting? No, they're going to take action and move into the marketplace. And then this next point here, disguised as renters, home buyers reveal themselves. I touched on this a little bit earlier. There are hundreds of people who did not want to participate in that frothy market that we were seeing in 2013 and 2012, and not really in 2014. And they said, we're going to lease. And they took out 1-year leases and 2-year leases. Those are all coming up. These are smart people. They're not normally renters. They just rented because they didn't want to get caught up in the bidding wars and so on. So now here they are. What they predicted would happen, and you all know someone's not going to buy in this market, I'm going to wait till it bottoms out and so on and so forth. Guess what? Conditions are just as they hoped that they would be. Prices have moderated and flattened. Selection is awesome in all price ranges, especially over $500,000. And sellers are super motivated, right? Because the market's been slower. So these people who have been renters, as their leases get ready to expire, you want to be contacting them. You're the ones who put them into leases because they don't want to be throw their money away. They don't want to be, they don't enjoy living in someone else's house or an apartment. They're homeowners, right? That's what they do. They're going to be moving into the marketplace as well. Otherwise, they'll be paying higher prices, higher mortgage rates, less selection, right? And then the last thing is pent-up demand. So I've been in the business for 34 years. Many of you have been in business that long or a shorter period of time. How many of you were in business during the recession, this most recent hateful recession? So quite a few. So that was, so what we've experienced the last 12 months, not a recession, right? Just a little flat, not awesome, but the recession was tough, right? And that was 4 years of toughness of pent-up demand. So we talk about pent-up demand. Human beings have needs and desires, dreams and wishes, right? You have people that, I want to buy another home because I want to get in another school district. I don't like commuting an hour and a half to work back and forth every day. I need a larger house because we're going to have another kid. I want a swimming pool. We don't have one now. I want a swimming pool so the kids can play in our backyard this summer and not be running off to neighbors' homes, right? We have people that are empty nesters, and they're living in 3,500, 4,500, 5,500 square foot homes that are vacant. All their kids are gone, and it's like a chain and ball, right? The extra maintenance, the extra upkeep, paying for a house that they only use 25%, right? So what happens is all of these people who have these dreams, hopes, desires, wishes, whatever it is, have been postponing and delaying what they were doing because things weren't right for that, right? So the people that normally be in the market, not in the market. The market gets good, safe, positive, then what happens is they can now fulfill their dreams, move and do the things that they want to do. And so we will have, in January, you'll have the normal market happening that for people that were going to make the move anyway. Being transferred are going to do that. And then we're going to have the people who are renters getting back into the market, the people who are postponing getting back into the market as well. So I think what we'll see is, it'll start slowly because people will be watching what other people are doing, right? So people in corporations and companies will be watching what their boss is doing. They go out and make a purchase, it's okay for me to do one as well. And then it starts trickling down, then it starts to pick up speed, and then it becomes in a big opportunity for everybody. So that is my prediction for 2017. And if you are a civilian and you want to take advantage of the opportunity, then they need to call one of you all-star pros here at Better Homes and Gardens, Gary Green. And if you're an agent and you want to take care of business in 2017, I'm going to tell you how to do that in just a second. Thanks for listening.